Hello, team. Welcome to the Market Minute. Today is November 17th, and it's Friday. And we've had a pretty good week. I'll say that. I want to turn your attention to pricing today. It's like blah. It's blah. We are looking at a really good week. This is where we started the week. This is where we ended the week. This is pricing here. Your UMBS is up. Let's see, from the lows near par. So probably 100 basis points or so from the lowest to the highest. So we're looking at a pretty good week. I will, raise a little caution here. We're staring at the 10-year. Let's show this chart here. And really kind of what everybody's doing and what the forecast is. And there's definitely been a sentiment shift. We've seen it. We've seen the 10-year kind of cross over some of these lines that you see in the technicals of this thing dropping through some of the moving averages, including your 50, not quite through the 100-day moving average yet. But we're seeing a shift in sentiment. The Fed, everyone's kind of thinking they're pausing, and they're going to aggressively move down towards the mid to late 2024. That's, the market's pricing that in. There's going to be some skepticism there that if they do move, how aggressive they're going to move. And right now, the markets are showing that there's going to be, around 100 basis point move by the end of 2024. And that seems pretty high, maybe even a little bit more than that. So that is expecting the Fed to drop rates towards the mid and tail end of next year, which is like right around the corner. So that's a lot. So I don't know if that starts to change and the sentiment change, what happens here. But right now, we're on a good trend. We're staring at the 10-year at 446. It was as low as 443 this morning. There was some actually 440 this morning, and we thought we might even break through that 440 mark. We'll see. This is a good trend to have. The worry I have is if any indication or anything shows that the Fed isn't going to drop rates that fast, maybe they delay it or push it back, or if there's a potential increase or if the odds of an increase go. So all we need to look at is inflationary data or some kind of employment blowout number. Then we could see this thing kind of do this big bounce back up to where we were when we were pressing against 5. But overall, the sentiment of the market is the Fed's done. Rates have hit their high point in terms of short-term rates, and mortgage rates should come down. So that's the sentiment. So we're gonna go with that. That sounds better than the alternative, right? Now we are in pricing areas that we were in September, so it's not this. It's a drastic move. I saw a lot of real estate agents posting about rates as usual when these things happen and rates coming down. It is a positive from last week and 2 weeks ago and last month that rates are much better. But we are back to where we were in September. The 10-year is back to where it was in September. So we're keeping an eye on that. If you guys have any questions, please reach out. We have our sales huddle today. Sean Hammond will be running the sales huddle today with ARC Home Loans and our account executive, Bob Miller. They have some great products. They have some great second home and investment alternative products. It's a investor solutions program that they have. Tune in, check out their programs. It's a great company with great products. And we'll talk to you guys on Monday during the market update. Thank you.